Now, we've recently wrestled with foreigners owning some of our farmland, especially with it being China. Well, some governors have passed laws to make that illegal, but it just happened again yesterday with one of our important business sectors, steel. Now, Japan's largest steel company, Nippon Steel, they hope to buy U.S. steel here for $14.1 billion. Now, it's a 122-year-old company, and it's an American icon. But it's been in decline for some time now. This latest move will still send some shockwaves across the country, and there's going to be some opposition from both sides of the aisle in Washington. Say both J.D. Vance and John Fetterman expressing concerns. Now, the union, they're not happy about this deal either. Now, this firm was started in 1901 when J.P. Morgan and Charles Schwab, yeah, that Charles Schwab, they bought the firm from Andrew Carnegie and combined it with their holdings in Federal Steel. They became U.S. Steel then. Now, my next guest, he's made of steel. Please welcome to the show, Keith Fitz-Gerald. Keith, thanks for taking the time, Superman. All right, what do you think about this? I mean, you know, Ashley and I talk about this all the time. You know, we're a democratic, open society. And if you're a farmer or whomever, a firm, you should be able to sell your firm or farmland for as much as you possibly can get. But at some point in time, we have some national interests we got to look after, right?
Well, we do. And, you know, this is one of those situations where we've got to take a good, hard look in the mirror. You know, are we comfortable with U.S. Steel getting sold? And if so, does it matter to whom? You know, the answer here is that I would submit a Japanese buyer is better than a Chinese buyer just because of the designs on intellectual property and the strategic concerns. Japan is an ally. China is arguably the dragon and is coming to dinner. So, you know, the question is, do you want to be at the table or on the menu?
Right, and that's the problem. So, I mean, it hasn't gone through yet. We're going to see some opposition, obviously, from some state legislators. Obviously, you've heard it from J.D. Vance and John Fetterman as well. And then the union, they're not too happy about it. But at the same time, it could reward shareholders. I mean, the bid was for 40% more when the stock closed the night before. So there's some money in this, too.
Well, there is, but the question is for how long? And this is where, you know, I have a tremendous sense of deja vu dating back to the 80s when Japan was the Superman, the yen was unstoppable. They were buying real estate assets at tremendously overinflated prices around the world, most of which came back to haunt the Japanese buyers a few years later when the bottom fell out from the Japanese markets. Yep. So if I were a shareholder of both Nippon Steel and or U.S. Steel, I would consider taking the money and running right here because this is the kind of acquisition that makes no sense. The premium is 114% or something since they started their review last August. That to me is like looking a gift horse in the mouth. If it falls lower and the deal doesn't go through, you can always buy back later. Meanwhile, there are some other opportunities out there.
Right, and so that cash can be probably deployed elsewhere better is what I'm hearing from you. I would agree with that. And my next question, I should never ask a question I don't already know the answer to, but I don't know the answer to this. Why would Nippon Steel want U.S. Steel?
This is interesting, and again, this speaks, you know, as you know, I'm married to a Japanese. I've spent 30 some odd years of my life in that country, at least part-time every year. They've got a stated goal that extends, I think, 100,000 tons worldwide of gross steel production. They're making a bet based on the fact that the UAW strike is over. U.S. steel consumption is going to go up because the automobile industry reaccelerates. I think that's a bad bet because alternative materials are coming into the supply chain. You've got China getting ready to sell EVs worldwide. And in fact, I think you've got legacy manufacturing in Detroit that is not yet prepared to cope with either of those things. So I think Japanese executives, there may be a possibility they have simply gotten too myopic. They're focused on something and they haven't learned their lessons from the past.
All right, now that you've given me that door open, my next question will be this, and it's more of an economic one rather than U.S. Steel, Nippon Steel question. But, you know, we hear about our debt situation here all the time, and it's big, and we own 34 to 35% of the total global debt. But our debt to GDP ratio is around 123, 124, right? So 123% of our yearly GDP is debt. So I think our legislators keep looking at one other country, namely Japan, as, hey, it's not as bad as it is in Japan. I know that Japan GDP, you know, debt to GDP is at 200%. How long do they have before they've got a debt crisis? Because we keep hearing about it here.
Well, they've already got one. They've had one for years. The difference is the way the Japanese consumers, investors participate. Japan, the investors there have long purchased Japanese government bonds. We've not done that here. I believe personally that what we're going to see in the next 5 to 10 years is the equivalent. We're going to see it through the American savings system. We're either going to be mandated to put part of our retirement funds into American bonds. I see them being sold to the American public as the patriotic thing to do, the patriotic thing to buy. You know, you and I both know that's not going to end well if the government's trying to sell them to us. But the point is, it's a very different economic structure in terms of the investment potential that's on the table. The other thing that we're seeing in Japan that we don't see here is the tremendous faith in the Japanese government, whereas here it's a tremendous distrust of the government. So they're very different situations, even though on the surface it's easy to draw that comparison.
Ah, perfect. So you laid it up to me perfectly. Their leaders of the Nippon Steel have said, once the deal, if and when the deal does go through, they're going to keep the headquarters in Pittsburgh, and they're not going to change the name. Do we believe them?
Yes, we do, because again, this is classic Japanese. What they're going to do in their strategy playbook is very simple. They want to establish a local presence. They associate the local manufacturing with strategic or international operation, not necessarily marketing and or sales. So they won't want to rock the boat. In fact, the Japanese Steel, Nippon Steel CEO said, hey, we know how to work with unions. We're familiar with this. Yes, you do. You're familiar with unions that actually get along with management, not here in the United States where they're antagonistic. So I think, you know, this could go either way. As an investor, I wouldn't want to hang around. This is a gift horse. I think I'm going to take a step back and say, woo, all right.
All right, we'll sum it up with take the money and run. Awesome stuff, Keith.
Yep.
Really got a lot out of that. Thank you very much. Keith Fitz-Gerald coming to us from Seattle. Thanks a lot, Keith. All right.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.